Hello traders, Gary Wagner here. It is just past noon in Honolulu, 6 o'clock in New York on Monday, 13th day of May, 2024, and this is the evening report for gold and silver. After gold had a significant price gain between the open last Thursday and the close last Friday, today we believe that profit-taking took gold lower by $32 as traders and market participants await the release of Wednesday's CPI inflation data for last month. Silver was in essence unchanged on the day as it traded in New York and is currently up about 5.5 cents in Australia. The current fixed price is $28.48 for July silver. The dollar declined fractionally, down 0.10%, taking the index to 105.246 after Thursday and Friday's strong collective advance and the fact that the gap of the real bodies created was in essence filled today is completely different than what we witnessed on the last bull flag that we identified. On that bull flag, we had numerous gaps that occurred between the real bodies and no backfilling. The fact that we only had 2 days of a price breakout and a subsequent decline today does not bode well for the bullish faction. It is clear that the next major move in gold is going to be based on fundamental factors rather than technical factors. Early predictions by economic analysts are looking for a small drop in both overall CPI and its core component. They are anticipating that year-over-year inflation will decline from 3.5% in March to 3.4% in April. They are looking for core inflation, which is elevated above headline inflation, to move from 3.8 to 3.6. That being said, even if Wednesday's numbers come in at expectations, which will indicate a contraction in inflation, the Federal Reserve looks for a trend rather than 1 month of data as having a large impact. So we would have to see the subsequent months come in showing a continued contraction, but most importantly, showing that the trajectory of inflation is now in alignment to take inflation on a longer-term basis back to their 2% target. If anything, the recent uptick in inflation is counter to what the Federal Reserve had hoped would happen after their aggressive rate hikes, which is why I believe traders moved the price of gold substantially lower today. However, we do need to factor in what the upcoming move in the dollar will be. The dollar has been trading in a very narrow trading range between 105 and approximately 105.50 over this last week. If we look at this price point right at around 105, we can see that it is significant on a technical basis. It acted as resistance in the middle of February as well as the first part of April. Last time the dollar broke hard, it broke hard in the middle of November when it opened at 105.70 and in a single day declined to 104. That's a 1.5% drop in the relative value. And a break below 105 on a closing basis could be a precursor to the dollar trading at least to 104 in the next 10 trading days. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.